Geographically, the seventh largest country in the world. One of the oldest civilization. World's sixth largest economy. A global hub for innovation with one of the largest startup ecosystem. India. City of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICAI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.
Good morning, all of you. On behalf of the Institute of Chartered Accountant of India, I welcome you all to today's webinar on use of digital technologies in enhancing transparency and accountability in government financial reporting and management, being organized by the Committee on Public and Government Financial Management under the theme of Azadi Ka Amrit Mahotsav. Now, I would like to welcome CA S.N. Gupta, Joint Director, Technical Director at ICAI, to throw light on the theme of the webinar. I welcome you, sir.
Thank you, Nikita, and very, very good morning to all of you. On behalf of Institute of Chartered Accountant of India, I am highly honored to take this opportunity to welcome all of you in this webinar on the use of digital technology and enhancing transparency and accountability in government financial reporting and management. This webinar is organized by the Committee on Public and Government Financial Management under Azadi Ka Amrit Mahotsav. I welcome Madam CA Kamisha Soni ji, Chairperson, and CA Sridhar Mupala ji, Vice Chairperson of this committee. Today, we have among us several distinguished personalities who holds vast knowledge and experience in the field of government accounting. I feel honored to welcome our keynote speaker, CA RM Johri ji, Additional Deputy CAG, and distinguished speaker from CAG, Shrimati Sanchita Shukla ji, CGA, and CA Parul Gupta ji, Deputy CGA, who will throw light on how digitalization is helping government in improving their financial reporting and its management. Over past 2 decades, India's governance has been significant digital advanced. Before the pandemic, agencies were primarily using digital to go enhance their capability, but still largely relying on the legacy operating model. COVID-19 pushed India into next stage of digital transformation with the intent to fight corruption, hold public officials accountable, and build trust with citizens. Indian government pursue the quest for greater transparency. The government of India has taken several digital initiatives to empower its citizens. These initiatives include Aadhaar-enabled payment system, Digidhan Abhiyan, MyGov, National Mission on Education, Pahal, the Pradhan Mantri Jan Dhan Yojana, etc. These are many more. There are many more such initiatives which have been able to touch the life of a common man and improve its well-being. However, today we will limit our discussion to similar initiative which has transformed the financial reporting and management in government, thereby contributing transparency and accountability. Public financial management system is one of the major initiatives in this direction. This is web-based online software application which facilitate payment, receipt, accounting, and much more for government, and it deals with real-time monitoring of fund utilization across government. I hope that the enriched deliberations of the webinar will widen your understanding on the subject. I once again wholeheartedly welcome all the participants. Thank you very much. Over to you, Nikita.
Thank you, sir, for wonderful introduction of today's topic. And now I would like to invite Chairperson of the committee, CA Kamisha Soni ma'am, for her welcome address. CA Kamisha Soni is serving her third consecutive term in the Central Council of ICAI. Presently, she is heading as the Chairperson of Professional Development Committee and Committee on Public and Government Financial Management of the ICAI, and as Vice Chairperson of Ethical Standard Board of ICAI. She has been nominated as member to distinguished international forums for accounting professionals, such as she is Technical Advisor, International Ethics Standard Board for Accountants, New York. She is nominated member in Committee on Governmental and Public Sector Enterprises Accounting of South Asian Federation of Accountants, SAFA, for the year 2022-23. Now I welcome you, ma'am.
Thank you, Nikita. A very good morning to one and all. As a chairperson of the Committee on Public and Government Financial Management of the Institute of Chartered Accountant of India, I welcome all the viewers to the webinar. I welcome a very warm welcome to respected CRM Johri ji, Additional Deputy C&AG, who is keynote speaker of the webinar. And I am grateful to him for agreeing to spare his valuable time to share his knowledge with us. Sir, we are sure that your words of wisdom and motivation will inspire us and also urge us all to learn from your experience. I also welcome our eminent speaker from CGA, Shrimati Sanchita Shukla ji, CGA, and also in absentia, CA Parul Gupta ji, Deputy CGA to this webinar. And I would also recognize the presence of our very active and dynamic Vice Chairperson, CP and GFM, this committee, for joining in the inaugural session, CA Sridhar Mupala ji, and also from office side, Joint Director, Technical Director SN Gupta ji, Nikita ji, and Technical Support Team. Before going further, first of all, I would like to give you all a brief overview of the committee's activity. As a partner in nation building, The ICI, through the committee, is contributing to improve the accounting and financial management system of government in India, including local bodies, and playing an important role in nation building. The committee is involved in sensitizing the official of various tiers of government in India by organizing workshops, developing relevant e-training modules, and so much more, as well as submitting technical inputs on various documents of Government Accounting Standard Advisory Board in India and internationally on the document of International Public Sector Accounting Standard IPSAS Board. And the committee is also involved in running certificate course on public finance and government accounting, and recently opened for government official as well as apart from chartered accountant, and also formulating accounting standards for local bodies. And just I would like to update about that standards. Till date, 30 ASLBs have been issued by the ICI, including one cash-based ASLB to facilitate transition from case to accrual accounting system. Out of these, the ICI has mandated ASLB 2 cash flow statement and SLB 5 borrowing cost and guidance note on accounting for investment for local bodies to comply with while auditing the financial statement of urban local bodies, that is with effect from 1st April 22. And just I would like to share one more initiative that we have updated our revised one publications, that is publication on commonly used terms in public finance and government accounting, that is covering modern and latest technology used in the arena of public finance and government accounting. So that will help various stakeholders in reading the financial statement of government in better manner. And also we have revised our curriculum and study material of certificate course on public finance and government accounting. We have added 2 modules related to PFMS and also PRIs, Panchayat Raj institutions. And I'm happy to mention here that the Committee on Public and Government Financial Management of ICI has taken several steps to increase its visibility, approach, and reach amongst government authorities, be it central or state or local level. The committee has also extended a helping and advisory hand to all those who desire and expected it, especially in the area of accounting reforms and compliance mechanism. Now, talking about the theme of today's webinar, digital technology is a user-friendly measure that has transformed the working and governance in India and has enhanced efficiency, transparency, and accountability of government. And after that, COVID-19 catalyzed the R&D programs to thrust propel many of government into the next stage of digital transformation. Several initiatives, what S.N. Gupta ji has also mentioned about related to Digital India programs such as e-procurement, big data analytics, direct benefit transfers, DBT, that all type of initiative already under that government schemes. So government has also involved in financial reporting and public financial management system tremendously through digital technology. So digitization enables citizen access to public information and also encourages citizen participation in public administrative processes. And also they are getting real-time data through that digital initiative. And even chartered accountants can play an important advisory role in strategic planning and effective implementation of digital technology in improving financial reporting and financial management, for incorporation of accounting and auditing guidance, and for embedding accounting and auditing standards in that process. So that is also very important in that segment. So with this word, I once again welcome all the viewers for joining this webinar. And all of you may ask questions on the window that already provided by technology team through chat box. And I hope that you all will be benefited from the discussion of the webinar. So thank you very much, and over to Nikita.
Thank you, ma'am, for addressing the participants. Now I invite CA Ram Mohan Johri, Additional Deputy CAG, for keynote address. CA RM Johri is a team member of Indian Audit and Account Services and part of the senior management of the CAG. He is having more than 30 years of post-qualification experience and responsible for taking policy decisions. He is a public sector governance professional with key competencies in public administration, accounting, finance, taxation, costing, economic management, auditing, and information systems. He has worked on areas relating to policy formulation, change management, and capacity building. He is working with CAG office, led the audit team in various prominent national and international assignments, including UN bodies and authorities, mainly UNDP, UNEP, UNICEF, WHO, FAO, and WFP. He is presently holding charge of Vice Chairperson GASAB, Government Accounting Standard Advisory Board. He has contributed as technical advisor to the IPSAS board. He has been actively involved in government accounting standard formulation, implementation, and migration of government accounts to accrual basis of accounting. He has been appointed as Government of India nominee on the board of NAFRA. He is also active member of expert committee of ICAI for drafting of accounting standard for local body. Now I welcome you, sir, for your keynote address. Please address the panel.
Okay, first of all, a very good morning to all of you. And it's a tremendous opportunity to talk to you about what is happening in government and what steps are being taken, although you would have come to know. But since we were involved in the process as such, so I think I can explain it better that what is the thinking. In fact, Prime Minister had come to our office in more than 2 occasions in last 2-3 years. He was talking about 2 main things. The first thing what he said is that in our country, when we take decisions, most of the policy decisions are taken based on perception. We do not have evidence in support of our decisions. So he said that accounting has to be transformed. It's not only recording the transactions or the events after it has happened, and it's a formality. It should provide the information to be able to take informed decisions. In fact, he has talked about evidence-based decision making. Now, when we see deeper into it, what does it mean? Meaning, when will the accounting information or the data which we collect and summarize and prepare our financial statements will become a source of decision making? There are 2 elements of it. One is the comprehensiveness and the completeness and the reliability of it. And the other is the time at which it is available. Because if it comes much after the event, then perhaps it is not of much use, because then it cannot assist the decision making. But if you want to take decisions based on information which is captured, then the timeliness becomes the essence. And it should be able to capture the big picture. It should be able to have sufficient details. You should be able to see what is happening, and then only you can take informed decisions. In fact, if you had an opportunity to see Niti Aayog website, if you have not seen it till date, perhaps you must go and see the data which is available about targeted districts. What they've done is that they have found out that in the country, what are the districts which are very much behind the rest of the India in matters of education, in matters of health, in matters of others. And they're making targeted interventions there to see to it. Because if India has to be developed, then every part of India has to be developed. If some parts are left behind, then that cannot be the case in which we can say the country is developing in real terms. So those are the things. So now accounting has a greater responsibility. It has to generate data, reliable data in a comprehensive manner, and at a time at which it enables the decision making. So this is a paradigm shift, in fact. In fact, earlier accounting was one of those repetitive activities which just take the formality of recording after the event has happened. But now it has become a more dynamic proposition. So if it has become a more dynamic proposition, then what we need to do to come up to those expectations. So this is something which I think is the topic which is in today's digitization. You've already mentioned many things have happened. In fact, what is the basic theme behind digitization? In fact, when e-governance was started by the prior governments, they were more into digitization only. But then e-governance 2 came in when the present government took over in 2014. They talked about a step further. They said digitization is okay, but from digitization, it has to mature itself to document management system, in the sense that it should become end to end. It should facilitate, doing things rather than just digitizing. Digitizing, the idea was that first of all, paper is not a very friendly thing environmentally. So digitization will save space. Digitization will make things available when you want it. And digitization will facilitate further treatment, transmission, and even exchange. But then if it is an end-to-end record management, then perhaps this is what is required. In that case, the physical paper would be replaced by a digital medium. And in fact, if you would have seen, there are many programs of Government of India. The prominent among them is e-office, where the whole office function is on computers. The file functions in an electronic manner. You can turn your pages, you can attach documents, you can link, you make your notings, and this can be seen by people as such. So this is something which is across the board becoming a reality. So perhaps we have to think not in terms of digitization only. We have to think in terms of document management systems. Now, what are the systems which do exist in government? Well, at a union government level, they've come out with PFMS, and of late offshoot has been DBT. In DBT, it has gone to another level, because accounting at the moment was limited only to recording the transactions which have actually happened. Whereas DBT enables you to transfer money in a real-time manner to the accounts of the people at. So what is this concept, how it originated? In fact, there was a trinity which was talked about in 2014-15, which is called the JAM Trinity. That is the Jan Dhan, Aadhaar and Mobile. In fact, the first step was that every citizen in the country should have an Aadhaar, which is a digital identity, which would help you recognize a person who is the beneficiary or the intended beneficiary to whom you want to connect to. The other thing was, then they said that just giving him an Aadhaar will not be sufficient. What you need to do is that a person has to be brought within the ambit of the banking channels for the funds to be transferred. Because if you do not have a bank account, then how the money gets transferred into your account? And with the branches which we have all over India, most of the branches are in the urban areas. In the rural areas, the reach was very less. For long or big distances, there was no branch as such. So how do you sort of go to a person and be able to reach that person and able to communicate with him or transfer benefits to him or to get feedback from him? That was the time they said that perhaps we need to make Jan Dhan accounts. Then the Jan Dhan accounts were opened in a very big way. There are more than, I think, 50 crore Jan Dhan accounts at the moment, which the Government of India has opened. So that gives not only a digital identity, that gives a bank account to a person. But just giving a bank account will not help, because you have to involve him in your processes, So what do? There comes the mobile. Fortunately, in the country now, we have the connectivity pan-India, and there are many operators for that matter. And even your network has reached to the remote locations. So it is the mobile. So in fact, if you see, they support one another. The Jan Dhan account enables that money can be transferred to a particular person. Aadhaar makes the recognition of the person possible, which is a digital identity. And through mobile, even if the bank branch does not exist, the money can be transferred and a message reaches you that you are, and that enables digital payment from the mobile. So that's how the outreach of the government has increased through this JAM Trinity, and you are able to reach the common man. So now what used to happen was that the money was transferred, and in fact one assessment was done by Rajiv Gandhi government, and they went on record to say that every 1 rupee which is transferred, hardly 9 to 10 paisa reaches the beneficiary. But now with the digitization and with this trinity which is in place, the money which is transferred here, it gets automatically gone into the account of the person or the beneficiary directly. The same applies to even PM Kisan Samman, which is there. The amount is transferred to the accounts of the farmers there. So now this is a paradigm shift now. that whatever benefits are intended to the people or the beneficiaries, they go directly to their account through this particular trinity. So we've reached another level. And even accounting has become an offshoot. The moment the transfer happens, the accounting aspects get activated and the expenditure here is populated. So we are reaching that level in which the timeliness has also improved. So two things which have happened with digitization, or rather end-to-end digitization, is that you are getting more comprehensive, you are able to control the things, you are able to transfer the money, there is a greater transparency involved. The people who transfer, they can be held accountable, and at the same time, the beneficiaries, you can get a response from them. If the money does not reach them, obviously you would know, this has not reached him for that matter. So these are the things. So even you get a feedback that what improvements need to be done in the system to reach the benefits to the people at large. So this is something which is a paradigm shift, and we are all a part of it. In fact, the day is not far off when most of the things will become digital. In fact, we are the fortunate educated class, and you would have known, meaning in last 2-3 years time during the COVID time, most of the things could be bought or services managed sitting at home. We had not to go anywhere and do, and that thing is on the increase now. So this is going to increase, and I think with the next month or so, the 5G technology also becoming available, even the speed of the things are going to improve a lot. So if that be the case, I think there is a greater reliance on the system now. Now that brings new challenges also, in the sense that if you have been monitoring that the instances of digital frauds has increased quite a bit, and digital security is a concern, because now when amount lakhs of crores gets transferred like that, how do we ensure that it is going to the right account or not? Because when the system is developed, then perhaps the persons who want to break the system or want to see that system does not operate as it is, that also gets activated. So that's also a full-time activity of many people, So there lies the challenge of the accountants and the auditors, that they have to build in controls to ensure that the system works as it was designed to deliver. And if not, what are the areas of concern, what needs to be done in that, so that the system works in a manner that it comes to an acceptable level, which is there in our mind. So those are the things which we have to think about. Now I would come to the reporting part and the managing part. In fact, reporting again. Reporting is meaning I'm sure that most of you would have seen government accounts, and meaning we all are a part of it in one capacity or the other. Even professional accountants perhaps will not make much out of the accounts the way it is made. If you want to know the financial position, or the debt sustainability, or you want to know what is the capital investment made, or you want to there are many things which need to be done. And what needs to be done to make it more transparent, bring it at the level. There's one thing which I had met your committee, I could not meet Commissioner Soniji because perhaps she was not in Delhi and not well also. But I could meet the other committees and told them that, look, in India, accounting is still a rule-based proposition. And we have to transit from the rule to the principle-based. And the world over, IPSAS board has come out with IPSAS cash basis of accounting. And in fact, we need to migrate to IPSAS cash basis of accounting, which will be a step forward towards accrual accounting in future. But if we have to go to accrual, then we have to again think on many things. I had shared my ideas very frankly with the committee at that point of time, that there are many important concerns, because accounting comes much later. Like this, if you see the parliamentary financial control, what happens is that it starts with the budgeting exercise. And after that budgeting exercise, the amount is actually spent or the money received. And then comes the accounting. After accounting, it comes the audit, and then the parliamentary committees where, it is discussed, the report is discussed. So if we have to go towards accrual basis of accounting, perhaps we have to start from the beginning, in the sense that the budgets have to be prepared, because that gives the authority to the executive to spend. If budgets are made on say cash basis and the accounting is done on accrual basis, how will you reconcile the two? There has to be a mechanism to reconcile the two. Otherwise, you'll end up spending which was not budgeted at all. And then moreover, accrual accounting also is going to bring certain uncertainties, because cash system, whatever said and done, has an element of certainty about it. That amount which is to be received or to be paid is determinate, and there are no true thinkings about it. Whereas the accrual system brings a system of assumptions and presumptions. So there has to be a mechanism to deal with that, so that it gives the desired thing. But I think more important is that certain information which is captured by the accrual system, let us try to capture that information so that it is readily available, and we are prepared that when a decision is taken, we can migrate to the new system. So what are those, that whether it is assets, whether it is your debts, whether it is your contingent liabilities and other things, so those are the things we have to work on. We have to identify the areas which are required, which need to be captured. At the moment, we may not make them a part of accounts or show it separately as notes to accounts or something. But when the mechanism is there to capture that information, that is the time we can say we are ready for that. The other thing is that, like the accrual concept itself derives itself from the matching concept, in the sense that matching concept says your expenses and revenues have to be matched to know the results of the operation. And accrual makes it possible, the matching concept to be operationalized as such. But in case of the government, we'll have to see that there is no correlation between the revenue and the expenditure, because the receipts are as per the taxation priorities of the government, meaning who is to be taxed, what is to be taxed, the level of taxation and all. Whereas the expenditure is as per, again, the policies and programs of the government. And the revenues which you earn are not due to the expenses which you incur. So there is no matching concept, and there is no profit concept also, because government does not work on a profit concept. So if you have to bring in accrual concept, we should be able to concretely say what are the advantages which are going to be achieved by having this. And then what are the new uncertainties which it is going to bring in along with it, and what is the mechanism to deal with it, to be able to reach. Because after all, accounting is only a means to achieve an end and not an end in itself. So if we have to give a proposal, you have to think in those terms, we have to be a composite whole. So that's, I thought I'd share with you, because I think it's very important, because at different forums, there is a talk about migrating to accrual. And in fact, we do comparisons with countries, say New Zealand, Australia, or maybe some Scandinavian countries. But you have to see that India, there is a lot of complexity involved with 3 tiers of governance. So what we have to do is we have to do it uniform throughout, so that it gives a composite whole. You said you made the standards for the local bodies, and everything is there. But then what about the account code? Is the account code uniform from top to below? Because Government of India follows a 6-tier codification for classification. You have to follow the same codes, so that any reader can be able to trace money from the union to the state to the local bodies, because then it will make a composite whole. If everyone has its own system, it will be very difficult to correlate and see that how the money is spent at the last point. So we have to see, when we see, we have to think big, we have to think long term, we have to see where we are going to add value, and then see how this is the best way to go about it. In fact, I'll share my screen and show you something about reporting, which we have done here in CAG office. This is to bring more transparency into the government accounting system, in the sense that we felt that the manner in which it is at the moment, perhaps it does not give you that much of transparency. So please confirm that you are able to see my screen. Huh?
Yeah, it's visible, sir.
Yeah.
It's visible.
Yes.
This is something which we have prepared both for the union and the state government, so that you can know the things at a glance, with the click of the button. And it is done with an intent that a common man is able to understand. So I'll show you just some of the features which are there. Like if you go to the union government and you just click the union government, how does it? Oh, yeah. It tells you that where does the money come from, how does it go, how is it applied. And the three tiers, what were the total receipts? Then receipts can be in the form of debt or the revenue receipts or capital receipts. And then loans and advances are also there. Then further, the revenue goes into the tax and non-tax revenue. And then you can see, and this is the level of internal debt. And if you click on that, it will give you greater granularity. Like if you want to see debt, see, when you click on debt, then perhaps you see that what is the level of internal debt over a period of time. Is it increasing? You can make a sense. And then similarly, how do I? So those are the things which are very, very important. Just a minute. I'll have to go back. Yeah, here it is. Then for a union government, you can even the quality of expenditure in terms of what it does in social services, what it does in economic services, how much of money is utilized in debt repayment. This all becomes available here. And you can have the third level, like tax revenue. If you really see the tax revenue, this is what we have to show. And in fact, you can go and do the trend analysis also. And when you do the trend analysis, you can see the different components of it and what percentage it is and how it goes. And here the GST got introduced. So what is the percentage of the total? So that gives you a feeling like how things are. Then this will be an interactive way of telling to the world at large, like how the union government, and the same thing applies to all the states also, in the sense that when you go to a particular state, say if you say Rajasthan, then you will get a similar picture for Rajasthan for all three tiers, in the sense that what are the total receipts, what are the total payments, and what are the different, and in fact, this gives you a picture in general, which, like, let's go to social expenditure, social services, if you want to see that what this is the level of expenditure. When you go, it will tell you the amount and the percentage, and it will tell you the trends, like if you want to see over the years in a particular, like how much expenditure was incurred and where is the increasing trend and what is the priority of the government. So those things make it very useful. Then it is a feature of an interstate comparison also. If you want to make comparisons, say if you want to say share of union taxes and duties, what do you go? You go and select your year. You select the states which you want to see, any random states, and just with a click of the button, you go and you can see that for the different states, what was the situation. And it will give you an impression, like in Karnataka, CGST is 28%, whereas in Kerala, it is a similar figure. Similarly, corporation tax, taxes and other incomes and all. So you can make even interstate comparison possible. And in fact, if you want to see other things like surplus and deficit, like fiscal deficit situation, then you can again select states, and then accordingly for a particular, and then when you sum it, you get the position that's there for say 4 years. Like Chhattisgarh, from this much, it has gone to this much, then it has increased further, Whereas if you see Maharashtra had gone down in 16-17, but has shown lesser deficits. So this type of presentation helps you in communicating with the people better, with the people who do not have an accounting background, people who just want to know the basics, who want to know the outcomes. And in fact, we have gone further, that this is a much broader picture. If you want to see the appropriation accounts where the ground-wise details are there, so we prepared a dashboard for that also. So when you go to a particular state, you can see the dashboard in the sense that you will see the grant-wise expenditure which is available. And in fact, this makes analysis possible. Say public debt is there. This is one. If we click public debt, it will get what are the different components of internal debt of the state government, loans and advances. If we want to see particular, say, loans for plan schemes, then it will tell you what is the situation there. And it can go up to the object in the detailed head and give you the exact expenditure. And then it is the facility of being downloaded in whatever form you want to download. It can also be shared in whatever way you want to share. So those facilities are there. It will tell you what is the type of expenditure, whether it is voted or charged, whether it is, meaning everything, every information which you think of can be brought here. And in fact, this gives you the transparency of going up to the last point where the expenditure has been incurred to know. These things can be adjusted as per what you want, the manner you want it. It can be grant-wise in serial number, it can be amount-wise, and it talks about budget, supplementary, surrender, expenditure, and everything is available with a click of the button. So if we go for reporting, I think what I would like to say is that perhaps what we need to see is that we report in a manner. This was incidentally happened to be designed, conceptualized and operationalized by me. So I know what the details are. And in fact, this is the way the reporting has to be, that it enables the executive to sort of able to see it with a click of the button, the information which is required for decision making. So reporting, if it has to be transparent, it has to be in the language which a person can understand. It should give information in respect to the parameters which are required for decision making, and it should make the things possible. Seeing that whole book, few hundred pages with all in details and all those statements can confuse even a professional accountant, So let us try to simplify things. Let us try to be going towards more standard-based things so that things become more palatable to a common man and they're able to understand. I think this is what I would like to say. And in fact, if you go to the state government, there is a system of IFMS, which is operational in, say, about 15 to 16 states at the moment. But, as the things are, IFMS developed over a period of time, in the sense that nowhere in the state government it would develop as a system. When you develop something as a system, it's all constituent parts, are developed accordingly, how they will interact with one another, how they will share information and all. IFMS was more of a voucher processing proposition. And in fact, what they have done is that they share information in a manner that on a daily basis, the state would know what the cash position is, so that they can determine the amount which has to be taken as borrowing from RBI to manage their finances. But it does not prepare accounts, because the state government, the way it's the position it is, it has interstate transactions also, it has transactions with the RBI also, it has transactions with the union government also. So those are not captured in the IFMS, which have to be done at the Accountant General's office for compilation of the account of the state government. So if you want to make a wholesome, it is not only that you digitize your things, you develop the systems, you will have to see the complete ecosystem. You have to see what are the constituent elements. You have to see how they interact with one another, so that there is a seamless integration between the systems. Then only it will make a wholesome whole and serve the desired purpose. So I think that's all I have to say. And now I'll leave it to the other members to contribute. Thank you.
Thank you so much, sir. Thank you so much, sir, to enlighten us with this word of wisdom and knowledge, and update us on government accounting system and financial management system. and also update us on current financial position and update on public finances aspects. And thank you, sir, for sparing your valuable time to address the participant. Thank you so much, sir. Now I invite C.A. Sridhar Mupalla, Vice Chairperson of the committee, for vote of thanks. C.A. Sridhar Mupalla has been elected as the Central Council member for the term 2022 to 2025. Currently, he is Vice Chairperson of the Committee on Public and Government Financial Management of ICAI. He has been a prolific speaker at various national and international forums. He has received Leadership Award for Excellence in Education from the then Chief Minister of Andhra Pradesh in 2013. He has also been recognized as the Time Education Icon Award in 2017. I welcome you, sir, and request you to give vote of thanks.
Thank you, Nikita. Thank you, Jory sir, for such a wonderful, elaborated experience. Our perception has changed after meeting you and after seeing today's presentation. First of all, on behalf of the Committee of Public and Government Financial Management of ICAI, I would like to thank all the viewers on joining this webinar on use of digital technologies in enhancing transparency and accountability in government financial reporting and management. I'm also thankful to the keynote speaker of the day, R.M. Jory sir, Additional Deputy C&AG, and also will be thankful to all the speakers for sparing their time today, Srimati Sanjita Shuklaji, who is a joint CGA, and CA Parul Gupta, Deputy CGA, for gracing this webinar. Their thoughts, ideas, and manner of explaining everything, I'm sure the way Jory sir has explained, will be more useful and make sense to and appreciation for the users. Sir, with regard to our CP and that is Committee for Public and Government Financial Management, we appreciate that sincere efforts are being made at all the levels of the government to improve the government accounting and financial management in India. ICAI, as a partner in nation building, is also involved in ongoing accounting and financial management reforms in government on public and government financial management. He is supporting the government in their capacity building exercise, contributing in technical manners as and when sought, and also formulating accounting standard for local bodies based on the corresponding international accounting standard, IPSAS. So with regard to the webinar, various digital initiatives have been taken by the government, which we could see from your presentation today, under Digital India program that has transformed the government sector in several ways and also brought a lot of transparency, efficiency, and accountability in their function. And also delivery of citizen-centric services, including strengthening of the government financial reporting and public financial management. The public and financial management system and audit online are two important steps in this direction. This PFMS facilitates sound public financial management system for Government of India by establishing a real-time efficient fund flow system as well as a payment cum accounting network. Audit online facilities the online and offline audit of account that also maintain the past audit records of the auditee who was with associated list of auditors and audit term involved in the audit. Also, this information is available in public domain. For local government, 15th Finance Commission recommended online availability of accounts, both audited as well as unaudited, as an entry-level condition of grants. Digitalization is necessary. Digital technology has its own pros and cons, as you have explained, and government also need to be aware of the risk and take actions to ensure the security and payments and associated data. They also need to ensure the governing digital cloud does not compromise citizens' privacy and classified government information and should include best practices that significantly reduces the risk to citizens. The accountancy profession and ICAI have an important role to play in supporting fit for purpose and public and financial management and the effective public sector. Working together, the government and accountancy profession can help deliver a more sustainable, inclusive, and prosperous growth future. High quality public sector accounting standards are critical to the strong public financial management, playing a significant role in supporting public sector transparency and comparability, accountability, and decision making. I hope today's session and the deliberations of this webinar will be engaging, very exciting and enriching. I thank you for all of you for being a part of this session, and I hope that today's session will show us all the future insights of the government and public finances. Thank you, sir.
Thank you, sir, for both of
Over to
thanks.
Nikita.
Thank you, sir. Thank you, sir.
Thank you, sir, for
Thank you,
both of
Jyoti, sir.
thanks and concluding remarks of inaugural of the webinar. Now we start our session. Now I welcome distinguished speakers from CGA. Srimati Sanchita Shukla joined CGA. She is 2000 batch ICAS. She has worked in various capacity in Ministry of Agriculture, Ministry of Finance, Ministry of Science and Technology. She has also worked as Director of Finance in NITI Aayog and as Director Accounts in Department of Fertilizer. She has also worked as CCA in CBDT and now since 2021 have been in PFMS. I welcome you, ma'am.
Thank you so much, Nikita. Good morning, Jyoti sir. Good morning, Sridhar ji. Good morning, all. So I would be just sharing my thoughts on PFMS. In fact, I have a small presentation to make about PFMS. I think a little bit of discussion about PFMS has already taken place, in which Sridhar ji has also pointed out that PFMS is one of the most important initiative of Government of India for digitization of accounts and the payments. So I would just want to take through the PFMS, how it all started and where all we have reached. And now PFMS has been touching on all the aspects of life of most of the people in India. So I'll just start with my presentation. I would just like to share it and would like to confirm if everyone can see my presentation there.
Not visible, madam, as of, I think, Nikita, you need to give some,
just give me a minute.
the screen sharing. Yeah.
Nikita, are you sharing?
Just a minute.
Nikita, have you given the co-host rights? Yeah. Just give the co-host rights.
Yeah,
I have shared the PPT.
Yeah, thank you so much. Thank you.
Yeah, it is visible now.
Yeah. Thank you so much. So I think, Nikita, now I'll just need your help in asking you to go ahead. So it's nice to be here because it is being held under the aegis of Azadi Ka Amrit Mahotsav. And as you know, PFMS has been in the forefront of having the in Azadi Ka Amrit Mahotsav. We've been organizing a lot of functions throughout India. We have SPMUs located in most of the state capitals. So in there, we have been having Azadi Ka Amrit Mahotsav, where we have been having this PFMS Mela. So in that PFMS Mela, basically we had banks, we had state government people, and the other people who are our stakeholders who would join in our PFMS Mela. There we would give a lot of brief about, as you know, there are new things that are coming up like CNA, SNA. So we told the people, the state government, about this SNA. So just to begin with, I would just want to start with the very beginning, where it all began. Nikita, can you show the second one? Yeah. I think there's a bit of a problem. I can't see, Nikita, the whole thing. I'll share it. Can you just
I am
if it is not working properly, I'll just please log out. Maybe I can just start try to share it once again.
Okay.
Now, is it is it to be seen?
Yes, ma'am. Your screen is visible.
Yeah. I think there's no technical issue now. Now, as we all know, PFMS is basically there
Just a
for.
minute. Please click on F5 and make it full screen.
Yeah, I've already made it full. Is it not full?
No.
Just a minute. Is it full now?
No.
Just a minute.
Make it in the PowerPoint mode. Yeah.
Is it okay now?
Remember, just click on F5. F5.
Okay.
No, it is still on PPT mode. And if you see, you can continue. Your screen is visible, you can continue in that mode.
Is it okay now?
Go ahead, please. It is visible.
I just go ahead.
Yes.
So, yeah. So it provides, we can facilitate the transfer directly to the account of beneficiaries. I think there's a lot of things which have been mentioned about DBT. So here DBT, first of all, we took it up in 2013, from which we started in Narega basically, and it the funds started flowing directly to the account of the workers. That was probably one of the most important thing that was done in PFMS at that point of time. It also provides an effective decision support system, tracking of funds. There are various reports which are available in PFMS through which the tracking of funds can be done by the ministries, the state government, and there's a real-time information which is available. We have also integrated our system with a number of government departments, and like NSP is one of the major stakeholders where all the scholarships are going directly to the account of the students. And also we have NTRP where the receipts are being collected. So I'll just give a little bit of a brief about the history of PFMS. It was actually started in 2009. It was a pilot which started in NITI Aayog, which was a erstwhile planning commission. And it is all started with a very small thing in which the MIS was supposed to be there in the central sector schemes. It all started with that. But going ahead, it started as appraisal of result and conversion into a central sector scheme. It became a central sector scheme where the national-wide rollout was done in 2014. In 2015, we started making DBT payments, except PEHEL. PEHEL has come on board recently. So I'll just be I'll be discussing about DBT in detail because that is one thing I've been dealing with. In 2016, NTRP was launched. Then 2017, the extension was given to the scheme. And in 2020, it became a regular activity of CGA. 2021, this new division of PFMS was created. As you know, the mandate that we have is we have to digitize payment receipt and accounts. We have to track the funds, DBT as I've already mentioned, and just-in-time transfer of funds is required to be done. Also, we have number of stakeholders which are there. It is not a single stakeholder that we have. We have multiple stakeholders and we have to deal with large number of people who are there who are looking out for PFMS. As you know, beneficiary account, it's 70 crore plus beneficiary account that we have right now. The banks, RBI, NPCI, all this combined, the stakeholders of banks are 540 plus. POs, we have 741 out of 865. CDDOs we have central ministry, state treasury, scheme domain, and the program implementing agencies, which as you can see are 30 lakh plus program implementation agencies that we have. This is just to give an idea how the DBT payments have gone and how the expenditure on and off PFMS has gone. The blue shows the expenditure that has been on PFMS. As you can see that it has been going continuously increasing. And from 1415 to 2122, the number of DBT payments has also increased. We have about 2.87 lakh crores of DBT payments that has been done. So now I will want to just discuss a little bit detail about DBT. As we know, DBT is, why do we need DBT at all? It's basically targeting the beneficiaries, the people who deserve to get, should get. That is the basic thing that is there. It reduces the delay. It targeting of beneficiaries is there. Also stopping leakages and duplication. If you just happen to go on the website of DBT Mission, you would see that they have given in detail about the savings that have been incurred on account of having the DBT. It's a huge amount that has been saved by DBT. We have also empowered the beneficiaries in that regard because it's coming directly to their account. There's greater accountability of the government as well. So I think this is just a repetition, just to tell you that it's all started in 1/1/2013. Basically, there were 56 DBT scheme, and now we have 891 DBT scheme across various ministries, which have onboarded on DBT. Objectives, I think I've already mentioned why DBT. So basically create greater accountability, reforms, increase in efficiency. And now to tell you about what is the role of PFMS in DBT, because we have different stakeholders in DBT as well. We have the stakeholders as NPCI, the bank, DBT mission, the ministries, the state government. These all are involved in DBT. So there are 2 or 3 things that DBT does. First of all, we validate the account for the ministries. Basically, they send the files to us in which we just validate their accounts and back to them. Then also we have NPCI, and in which they help, in which we have the Aadhaar seeding. We check for Aadhaar seeding. We send it for the Aadhaar seeding details to the NPCI, get it confirmed from them, and then we send the file back to the ministries telling them that now you can send the payment file to us because we have confirmed that the account is validated, the Aadhaar is validated. Then we also have the pay and account officers of ministries and schemes who are implementing agents of the implemented agencies who can make the e-payment directly to the beneficiaries and the validated bank account directly from the PFMS or through the externally integrated system. As I've already mentioned earlier, we have about 891 integrated system as of now who send the files to PFMS for making the payment through DBT. This is just to give an idea about the PFMS ecosystem, how the DBT payments are being made. We have a schemes portal who sends the file to us for account validation. Once the account is being validated, they again make the file, send us the file for the payment file processing. We do the credit tracking, whether the credit has gone to them or not. We are also sending the SMSs to the beneficiary to confirm the payment has been done or not. So this is again, I think, the repetition, just to give you an idea about how the DBT has, I mean, in financial terms, in transaction terms, in amount terms, the DBT is really large. So the number of schemes which have been onboarded as 891, and as you can see, the huge number of total transactions that have been done on PFMS is about 145.27 crores. And we've made the amount involved is 3.07 lakh crores. That's a huge amount, as you can see. So the flagship DBT schemes are basically Mahatma Gandhi National Rural Employment Guarantee Program, which is based upon the Act. The transaction count is about 45.25 crores and the amount has been 1.01 lakh crores. We also have Pradhan Mantri Kisan Samman Yojana, which is PM Kisan, That is also one of our flagship schemes in which the payment are made on the regular basis to the farmers directly to the bank account of the farmers. We have the National Health Mission where the payments are made. As you can see in the PM Kisan, the transaction count has been 33.95 crores. That is for the financial year 21-22, and the amount is 1.68 lakh crores. That's a huge amount. Now, just to tell you as to what we are doing, what are the initiatives that we have taken up recently. I mentioned earlier also, we have a scheme of PEHL, which is the scheme of Ministry of Petroleum and Natural Gas. It is completely integrated with PFMS for end-to-end dispersal of LPG subsidies, and that is being done from 1st August 2021. We have the facility of sending SMS. This figure shows that here the figure is very small because for initially we were sending SMS in only few schemes, but now that till now we have been able to send about 3 crores SMSs from July till now, because it has now been rolled out to almost all the schemes except for Manrega. Also, I'm talking about this year, 68 external systems have been integrated, 16 external systems in various states and social justice ministries are there. We are having a DBT development and monitoring cell. We have also tried to develop a special protocol in Manrega, and we are also supporting autonomous bodies for DBT payments in TSA. So TSA, we are going to discuss it later. My colleague, Ms. Parul, will be discussing about it. Just to give you an idea about the scale of transaction and the payment amount, because this will just tell you that from where we started and where we stand now. In 14-15, we started with 56 schemes and the amount paid was 0.06 lakh crores. And as on 21-22, we have 891 schemes, 3.07 lakh crore is the amount that we have. And so, as you can see, this is about for the half of the year, the amount is a little bit less, but it's likely to increase in the coming months. Now, the achievements have been numerous, and it's difficult for us to just bring over here all the detailed things that we are doing. But just to mention that during the COVID times, PFMS was at the forefront of Government of India, trying to help them to give wherever the help was required to be sent to the beneficiaries. PFMS was at the forefront. For example, in this April 2020 to June 2020, the two cash transfers were required to be sent to female beneficiaries in Jan Dhan account in Pradhan Mantri Garib Kalyan Yojana. In that, the amount was paid. In Food and Civil Supplies Department of Gujarat, under COVID-19 welfare program, an amount payment was made. During COVID times, cash transfer was made under midday meal program. We have also integrated with various government portals to help them during the COVID times. The most recent initiative that has been taken up by DBT is having a DBT dashboard. Various stakeholders can have a look at the DBT dashboard, can see the figures, can see the ministry-wise details. In fact, this is a very, very good decision support system where they can have a look at it, examine it, analyze it, see how the banks are doing, how the state governments are doing, the number of unique beneficiaries that we have, the payment page. On the single page, it gives the whole idea about the whole DBT purview that we have been having. I'll also touch upon one small thing that we are also doing. This is about the Bharat Kosh, that is non-tax receipt collections. Basically, that was launched in 2016 to facilitate the digital collection of receipts using internet banking, credit card, debit card, NEFT, RTGS, etc., etc. So we have this operates as a host platform as well as the integrated platform, and this we do have real-time collection of receipts over here. The realization, accounting, and reporting is also being done in real time. Oh, and we have this non-CFI collection such as Swachh Bharat Kosh is being done over here. And now coming to the next part of our presentation, which involves major recent initiatives. We have eBill and we have SNA model for release of function. We also have one CNA and TSA. That would be discussed about by my colleague, Ms. Parul Gupta. So I think my portion is done. So I would like to hand it over to Parul Gupta to take over from here. I think Parul is online.
Yes, ma'am.
Yeah, Parul. So maybe you can take it up from here. Thank you very much.
Thank you, ma'am, for wonderful.
So I'll stop sharing. Parul, should I start sharing or you will share?
I'll share, ma'am. You can close it down.
Okay, thanks.
Thank you so much, Sanchita ma'am, for wonderful discussion and briefing us about PFMS, DBT, and its flagship schemes, role of PFMS in DBT, current initiative of government in this direction, and achievement of all the schemes. Now I invite Paul ma'am, CA Paul Gupta, Deputy CAG. She is 2010 batch Indian Civil Account Service. She has handled various responsibilities in different positions. During 2013 to 18, she had served as Assistant Controller General of Account in PFMS. During 2018 to 20, she had served as Deputy Controller of Account, Ministry of Environment, Forest, and Climate Change. During 2020 to 2022, she had served as Controller of Account, Ministry of Agriculture and Farmer Welfare. Currently, she is posted as Deputy Controller General of Accounts in CGA headquarters and rendering technical advice in accounting, administration of the accounting code, and various manual of financial and accounting. Now, I welcome you, ma'am.
Thank you. Good afternoon. I hope I am audible. I would be talking about the recent initiative of the government and the financial management. My main focus would be the eBill project and the SNE model, which is being used for the centrally sponsored scheme, Government of India. This eBill project is basically This eBill project is basically electronic bills that are being presented to the government payment authorities. So before eBill, actually when the manual bills were presented to the payment authorities, there were these kind of activities we were doing, like budget execution, monitoring and reappropriation. These all activities were being done originally on PFMS since inception. Accounting and reporting was also being done on PFMS, and payment was also being done in most of the cases in PFMS only. And in fact, you all must be knowing about the JAM, this government e-marketplace. PFMS has integration with JAM, where end-to-end digital payment is being done since the launch of the JAM. Now, when the eBill has been introduced, the eBill means the physical bills has to be dismantled completely. No physical bill at all. The eBill means all the bills which would be presented electronically only. So the main rationale behind the eBill is that the faceless, paperless payment, ease of doing business, and faster payment. Because there are some DDOs which are sitting quite distant from the payment authorities, the PEO. So through eBill, they don't need to submit the bill physically. So this e-bill would be introducing the faster payments for the vendors to the of the government, and obviously better accountability and better liquidity of MSMEs, because most of the vendors are coming from the MSMEs only. And last is the online tracking, because in e-bill, recipient can know where the bill is lying, like whether it is with the division, whether it is with the driving and disbursement officer or the payment authorities. So this online tracking and monitoring of pending bill is there end to end in e-bill. See, in the before e-bill, these were the main. This slide would be showing the how the era before e-bill was there. Like PFMS was still there, banking channels were there, file processing was being done manually, and other processes were also there. But payment, all the functions of payments were on PFMS, but the submission of bill by vendors, like the vendors who are the service provider to the government, they were presenting the bill physically. So all the this whole transaction was online, but they had to submit the bill physically also. There was no electronic submission of bill directly. So before e-bill, there were some challenges, like they have to submit, the vendor has to submit the original claims and documents. Then there were paper records, and there were actually lack of monitoring and accountability, because the physical papers had to flow in the system. After the online submission of claims, this the period in which the physical bills are submitted to the payment authorities, this whole process is digitized. So this is there is an online submission of claims. So the time of submission and the period of pendency has reduced considerably. Though e-bill has not been introduced in all the ministries, but it is in the pilot stage right now. But through the pilot stage, we can actually came to know that there is a huge reduction in pendency after e-bill. So the claimant is submitting the claims online, and through on PFMS, the whole processing is still like that. Only the digital signature has been introduced, so that the authenticity of bill remains. This is the PFMS dashboard where we can. This is a pictorial representation of all the payments and all the expenditure of the government. And here we can look at the expenditure of the government through various pictorial graphs, like what are the grant wise, because in government we distribute the whole expenditure in grant. The ministry's expenditure is represented through grants, and within the grants there are various schemes. So we can see the grant wise expenditure also, and scheme wise expenditure also, and through recipient wise expenditure also, and different modes of expenditure like DBT, TSA, NTRP. NTRP is basically receipts. So these kind of different kind of reports are there, where we can look at the expenditure from different angles. So because PFMS is basically has been originated as an MIS system. So the reporting structure is quite good in PFMS, and we are actually capturing different details at the time of the first transaction. So the different kind of make and break reports are there. This is the dashboard for bank, because the bank are a very important stakeholder in the whole process, and because all the payments are through banks, so the bank performance is really important. And through this dashboard, we check the performance of the banks, and through various criteria and various indicators are there for their performance checking, because we have been integrated with banks not only for payment. There is various aspects in the bank integration, like accounts are validated, balance are updated, balance are shared, and the beneficiary details are also there. So we are actually analyzing the performance of the bank through various aspects, and this dashboard is providing what are the ranking of a particular bank at a particular time. So this is how we monitor the banks. This is the e-bill and bank performance. Now I would be talking about the single nodal agency. You know, in the government, there are basically two types of schemes that are there in the government. First is the center sector schemes, and second is the centrally sponsored schemes. Center sector schemes are those schemes where government is, the scheme is being implemented by the government and through their central government agencies, basically like PM Kisan scheme and scholarship scheme. So in central sector schemes, there is no contribution of the state government in the fund management, also in the implementation. Implementation means there are a few schemes where state governments are there, but majorly the center sector scheme is the responsibility of the central government. But in case of centrally sponsored schemes, what happens? These are basically those schemes where the responsibility is also shared by the state government. So fund is also shared by they have the some kind of center state ratio in the centrally sponsored schemes. The major implementation of these schemes is done by at the state government level. So what happens in centrally sponsored schemes, government generally gives the money to the state government treasury. So if you could see this slide, we have that ministry, and the red one is, the red circle denotes the central government treasury, and in between them there is one note that is depicting RBI. Basically, RBI is the banker of central government as well as the state government. So in centrally sponsored scheme, the transactions are done through Reserve Bank of India. So though these kind of fund transfer is done through PFMS treasury, PFMS, and after that the green circle denotes the normal commercial banks transactions, because when the fund is lending into the state government treasuries from the central government ministries or departments, then from central government treasury it is given to the state level implementing agencies, and from there can be different kind of levels that you know. There may be district level agency, there may be block level agency, or there may be panchayat village level agencies also. So these green circle denotes the normal commercial banking arrangements where these implementing agencies and their subsequent agencies may be having commercial bank accounts. So the red one denotes the RBI and the green one denotes the commercial banking arrangement. So this central government treasuries transactions are taken through PFMS treasury interface, and this the green circle transactions are taken through BFMS BCBS interface by the PFMS, and we prepare a MISOE. Now this green circle, this green जो आपका पूरा area है, this is the flow of the centrally sponsored schemes. So when we look at this flow, what's happening? When the center share is going to state treasury, we are capturing it through PFMS. But when the state treasury is giving fund to implementing agency, after adding their state share, then we have kind of little difficulty, because now we have to capture the implementing agency, because this state treasury to implementing agency transactions we were not capturing. So the visibility majorly restricted at this point from center share to state share, center share to state treasury. So to improve the visibility in these transactions, this SNA model has been introduced by the government in last 2 years. In SNA model, what's happening? The center share is going to state treasury. Similarly, state share is also coming to the state treasury, obviously. And from state treasury, the money is going to SNA account. SNA means the single nodal account. this single nodal account basically is mapped in PFMS. So through my ministry department at any level, I can check what is the fund there in the SNA account. So when these SNA guidelines came, the first thing that government enforced was that there may be a number of agencies below the SNA account. So all these agencies have to give their money float lying in their account to SNA account. So whatever unspent balance was there in any kind of below level agency or subsequent agency below SNA account, at the time of introduction of these guidelines, these implementing agencies gave their money back to the SNA account. So whole float was visible in the SNA account, and this SNA account we could see from the ministry and department. Now, because when we look at various complex schemes in the centrally sponsored, because centrally sponsored schemes are basically implemented in the states and they are quite complex. So there may be number of implementing agencies and sub-agencies. So what's happening in this SNA model? The SNA account is majorly a commercial bank account, but below the SNA account, the implementing agency or sub-agency are having bank account, but without any balance. So these accounts are called zero balance accounts. And these accounts of a particular SNA is linked with the SNA account. So if any implementing agency has to do any transaction, they have to do the transaction through the SNA account. And this SNA account is there for each and every scheme of the governments. If there is a kind of NREGA, then NREGA would be having in a different SNA account. PMGSY would be having a different SNA account, because this one SNA account is denoting the bunch of agency under that scheme in a particular state. So SNA account is really important, and this SNA account is basically denoting the float of the government in CSS schemes. Though I have explained why SNA, but major benefits of SNA is that the monitoring of available funds, because see, the government's recent initiatives are basically aimed for reduction of floats, and floats are there in different level at different agencies, in state level, district level, village level. So the monitoring all the agencies is quite a difficult task. So if we are having a lesser number of nodes to monitor, then there would be better monitoring. So monitoring of availability of funds and monitoring of utilization of funds becomes easier when there are less number of nodes. So SNA account is helping in monitoring of funds. Second, obviously reduction of float, because the float that was there and that was hidden in like below level agencies now is visible. When the float is visible to the government, so obviously the subsequent releases and subsequent fund transfer is also restricted looking at the float. So reduction of float is basically there. And obviously effective cash management, because government can't spend the money where the money is already there, but the issue is in the utilization. So effective cash management is obviously a major benefit of SNA. This would be the brief SNA process formally. First, a particular scheme in a particular state, they would be designating, the scheme manager would be designating a single nodal agency. The single nodal agency will open an account in commercial bank. For the convenience of the scheme manager, the government has instructed that there can be a separate SNA for sub and umbrella scheme also. Like if there is a very complex scheme, like we have the example of National Health Mission, which is a very complex scheme, which has various sub schemes also. So various sub schemes would be having separate SNA account. Then SNA will be receiving the form from the treasury, but in the implementing agency, they won't be transferring any. So they would be defining the drawing limits to the implementing agency, because implementing agency, as I have said before, they are having zero balance account. So SNA would be defining the drawing limits to the IAs. Then IEA is having the zero balance subsidiary account in the same bank, because the same bank is really important, because in the bank only, because these zero balance accounts are basically linked account to the SNA account. And whenever the implementing agency is doing expenditure, the expenditure would be done through the linked account of SNA. This is the brief statistics, because SNA is a quite a brief period since its implementation, unlike DBT. But presently, 100% centrally sponsored schemes of Government of India are there on SNA module. Other than the centrally sponsored scheme, there are linked scheme of the states. Like whenever we have a particular scheme of Government of India in a particular state, there can be having a number of state linked schemes which are linked to the CSS of the government, and the name can also be different. So presently there are 3,000 state linked schemes which are on SNA module. The agencies are quite huge, 8.6 lakh agencies, and their zero balance accounts has been registered since the beginning of SNA module. 100 crore transactions have been processed and 1.6 lakh crore have been transferred. This is the SNA dashboard. SNA dashboard is basically obviously pictorial depiction of the whole process. So this picture is basically telling about the summary of financial data of the centrally sponsored schemes and the state linked schemes also. And the bank-wise interest means the interest has also been returned to the government. So this is a very important factor in the government process. So this is also having a space in this dashboard. And as I told you, the CSS is telling about the center and state share. So we are also monitoring what how much is what was the share of the state government and how much they have contributed. So we are looking at the center state share also through this SNA module. And these are the different kind of reports or pages available on the dashboard. And these are the releases, expenditure, and bank balances of the SNAs. And we can see, we can look at it through state-wise information also and scheme-wise information also. And we can make and break the information. And these are again some information. Because see, these dashboards are meant for the scheme managers in the ministry, because when they have given the money, it is given in the dark. So through these dashboards, there is a visibility to the government, like whatever you have given, these are the current scenario of that money, and these are the floats that are there in different levels. Because now the floats is there only in that SNA level, and below that there is no fund which is lying as float after the SNA module. So this is basically a depicting about the money available in the system. And these are more reports. Now, these are all the SNA. Now we are going to the CNA. As I told you, these SNAs are basically for the centrally sponsored schemes where the state and center both are contributing. Now, there are some schemes which are called center sector schemes. And in these schemes, the 100% responsibility of implementation, money, fund management is through center government. So for these schemes, this is the latest procedure that has come in recent past. These procedures have come in this financial year, 1st April 2022. In this module, there are two models, and these models are for the center sector schemes. Like we have PM Kisan in center sector, scholarship schemes, pension schemes. So under this model, the schemes which are having 500 crore plus transaction, that would be paid through the RBI, and model 2, which are having 500 crore, less than 500 crore budget, they would be processed through bank. And in TSA system, what we are doing, we are basically appointing a CNA. CNA is a Central Nodal Account, Central Nodal Agency, just like the SNA, the CNA. And these CNA are having account in RBI. And we are not giving any fund to these CNAs through TSA. We are just giving assignments. And whenever they need money, they debit, they use this assignment. And at that point of time, the CFI is debited. So we save the interest money of the time gap between the release and the actual expenditure through TSA model. In CNA model, similarly, there would be a CNA, but the account would be in the commercial bank. And the commercial bank, the first fund would be transferred to commercial bank, but after that, there won't be any transfer. There would be assignment for it. And all these jargons and these modules are basically for reduction of float and reduction of and the better management of funds in the system. And as Sanchita madam has told, that there are DBT, there are direct reimbursement. So there are some exceptions in the CNA module. Wherever there is DBT, these models are not adopted. So DBT schemes are exception in the TSA and CNA. And through a calculation, the savings is around 10,000 crore per annum to SNA and TSA already. Now, we have captured 2 points. One is the centrally sponsored scheme, and the second is the center sector scheme. The new concept that I'm now introducing is TSA. TSA is there in center sector schemes also. TSA is there in autonomous body laws. So I am now talking about the TSA system in autonomous bodies. In the government, there are few agencies which are autonomous in nature, where the whole their management, the fund is their salaries, their establishment, the whole fund is transferred by the government, like AIMS, ICMR, IIT. These are agencies which are getting funds from the government, and ICAR. So this system is basically again a concept for the float reduction. In it, what happens, the cash is not moving from the CFI at the time of the fund transfer. Basically, the fund is not transferred when any release is made. At first point, only assignment is made from the central government ministries to that particular autonomous body. And when the autonomous body is making any kind of expenditure, then only our CFI is debited. So the ABs and sub-ABs are made to draw directly from the GOI on the basis of their assignments. So this is a just-in-time, pure just-in-time release. In pre-TSA system, what was happening? Ministry were giving the funds to their accredited bank, and from accredited bank, the money was going to the autonomous bodies commercial bank account, and from commercial bank account, autonomous body was giving to the beneficiary or payee. So the fund was lying in the from RBI to commercial bank. So there, it may be possible I am transferring the money to the autonomous body at 1st April, but actual money, the actual expenditure would be in the piecemeals. Like if I have transferred 100 crores at one go, there may be expenditure like 10 crore on 10th April, 1 crore on 11th April, 2 crore on 15th April. So there may be piecemeal transaction. So under TSA, what is happening? The whole transaction is on just in time. So if that money is going on 11th April 1 crore, then only 1 crore will be taken out from the government. If on 15th April 5 crore transactions are there, then only 5 crore will be taken out from the government. So this is a just in time, and commercial bank account of ABs have been eliminated. This is just in time cash outgo. And all this process has been made possible through PFMS system. And these are the statistics, and these statistics are up to for 2 months in 22-23. So thank you. If anybody has any question.
Thank you, ma'am, for wonderful discussion and giving us knowledge about e-bill project, SNA, TSA system. Ma'am, we have received few questions from the viewers, which are pasted in the chat box. You can take up one by one.
Okay. The main first question is any proposal to involve professionals in PFMS. Basically, the PFMS is the technical support of the PFMS are being provided through NIC through their technical professionals. And whenever there is any, so the technical work is being done by the professionals only. But as we are in the forum of the accountants and obviously chartered accountants, so the basically the professionals the accounting professional, there is no proposal, because the PFMS is managed by a government accounting service, which is civil account service. But whenever there kind of study or there kind of any kind of new proposal in future, I can't be saying there won't be any kind of involvement of professional. Presently, there is no proposal for the accounting point of view. The technical professionals are there in the PFMS system. Second question is whether there is any planning to incorporate accrual accounting aspect in PFMS. Presently, what is happening, the government is working on the cash accounting concepts and cash accounting rules. So whenever, because PFMS is a system and which is going with the flow as the government decides. So as government will incorporate the accrual accounting, obviously the PFMS will also be providing the platform for the accrual accounting. Because PFMS is presently catering to the needs of the government, central government, state government, so which are basically on cash accounting system. So there are the cash accounting aspects in the PFMS, but whenever the actual accounting aspects will be involved, obviously the PFMS would be making the changes accordingly. Whether integration of PFMS and e-Gram Swaraj has been completed. On this question, I think Sanchita ma'am would be able to answer better, because presently I'm not in the PFMS team. And the last question is whether any work is being given or outsourced to CS to certify entities and work being entered in PFMS. Yes. In the government, there is a concept of the utilization certificate. So all the utilization certificates, there is government requirement that whatever money is released, this has to be certified. The utilization has to be certified, and this utilization certificate is signed by a chartered accountant only. So there is a CA involvement at the time of the utilization of the money that has been transferred. So, and that UCs are actually entered in PFMS. Any other question?
No other question I'm missing. Sanchita, are you available? One question is left. We can take up that question. Might be she has left.
Okay.
Okay.
Thank you.
Thank you, ma'am. On behalf of the Committee on Public and Government Financial Management of ICAI, I thank you to all the viewers who are attending this webinar online. I'm also thankful to the distinguished speaker from CGA and CNAG, CA RM Johri, Additional Deputy CAG, Srimati Sanchita Shukla, Joint CGA, and CA Pal Gupta, Deputy CGA. And I am also thankful to Chairperson and Vice Chairperson of the committee and Joint Technical Director of ICI for joining in the inaugural of the webinar. Thank you all for joining this webinar. Have a nice day.
Geographically, the 7th largest country in the world, one of the oldest civilization, world's 6th largest economy, a global hub for innovation with one of the largest startup ecosystem. India, city of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.